Tesco has reported the worst results in its history with a record statutory pre-tax loss of £6.4 billion for the year to the end of February. That compares with annual pre-tax profit of £2.26 billion a year earlier. It is the biggest loss suffered by a UK retailer and one of the largest in the country's corporate history. Around £4.7 billion of the losses were the result of the fall in property value of its UK stores, 43 of which it said would close earlier this month. The decline in the value of its property portfolio comes as a direct result of declining footfall in many of its out-of-town superstores. Tesco chief executive Dave Lewis admitted it had been a very difficult year for Tesco. Tumultuous year. He added, "The results we have published today reflect a deterioration in the market and, more significantly, an erosion of our competitiveness over recent years. We have faced into this reality, sought to draw a line under the past and begun to rebuild, and already we are beginning to see early encouraging signs from what we've done so far." He added that he expected conditions in the coming financial year to remain challenging. But investors reacted positively to the results. Tesco's share price rose by more than 1% in early trading on the London Stock Exchange to 237.8p. The results cap a tumultuous year for the supermarket giant, which is still being investigated by the Serious Fraud Office, SFO, after it overstated its half-year profit forecast in August by £263 million. Annual group trading profit, which counts sales through the supermarket's tills, was also down 60% at £1.4 billion, compared with £3.3 billion a year earlier. UK like-for-like sales excluding fuel declined by 3.6% in the year. The company said the performance of its European stores disappointed as a result of strong competition from discount retailers, which held back its sales performance, particularly in Ireland, which saw a like-for-like sales fall 6.3% in the year. In Asia, Tesco said trading profit was £565 million, once currency fluctuations were stripped out, 15.3% lower than a year earlier, a result of sales falling in South Korea, Thailand, and Malaysia. Tesco said it had also agreed a plan with the trustees of its pension scheme to pay £270 million a year to help mend its £3.89 billion pension deficit. Another shocker. It has started a consultation with staff to replace the current defined benefit pension scheme with a cheaper defined contribution scheme. Mark Kimsey, senior trader at Accendo Markets, described the results as another shocker from Tesco. He added, "This set of results disappoints on every level. The pre-tax loss exceeds the city's already dire expectations and the trading profit has fallen by almost 60% in just a year." Traders are now discounting positive management rhetoric regarding a turnaround plan. Only the numbers will do now, and sadly, they are not only disastrous, but deteriorating. Meanwhile, Paul Thomas of the retail consultants Retail Remedy, described the results as not only one of the biggest losses in British corporate history, it's a black hole that risks consuming a once all-powerful brand. He said, "To say Tesco's chief executive has a mountain to climb to reverse its decline is to underplay the scale of the task. At times the combative Mr. Lewis must feel like an ant scaling the Himalayas."